You're watching the program that identifies market trends, provides insightful analysis, and reliable research. Key elements to help you profit from the pros. Profit from the Pros is brought to you by Zacks Investment Research. Learn more by visiting them online at zacks.com. Welcome to Profit from the Pros. I'm Terry Ruffalo. Stocks went back and forth between gains and losses this week before gaining support on positive jobs news. Corporate deal-making showed some more signs of life. Economic data was mixed. Meanwhile, Fed Chairman Bernanke told the Senate Banking Committee that while rising energy prices may dent the recovery, rising commodity prices have not yet posed any major threats. Some profit-taking and talk about a peace agreement in Libya helped keep a lid on oil prices, but investors still kept an eye on the overall tension in the Middle East and North Africa. And capping off the week was Friday's news of job acceleration last month as non-farm payrolls increased by 192,000 and the unemployment rate fell slightly to 8.9%. We're going to be talking more about that at the roundtable a little bit later on. Kevin Matris, our market technician, joins me off the top of the program, though. We haven't had a chance to talk technicals with you in quite some time, so let's take this opportunity to do that. Here, Tell, you're predicting Dow 13.1.
Right.
What technicals do you see that support that?
Well, you know, first off, if you were to go back to Q3 of last year, right, July, August, September, the market at that point was at a crossroads.
Right.
Seems like we're always at a crossroads. But back then, we were continuing to test the 10,000 support area. But so many people back then, they were looking for the market to break down below there. However, at that time, and based on its chart pattern, we were predicting a move up to 12.2.
Okay.
And I'm very happy to say that by mid-February of this year, we saw the market get as high as just under 12.4. As for the extended prediction to 13.1, you have to go back a little further than that. So if you were to look at the move that preceded the consolidation pattern in September that we were talking about, the move prior to that was 2,381 points. And that was made on a bullish breakout from an inverted head and shoulders pattern back in 2009.
All right.
So what you want to do is, and this is what a technician will do, is he will add the 2,381 point move to the breakout point. Now the breakout point in September was 10,719. So the 2,381 to 10,719, that gives you the price target of 13.1 for the Dow, and that is why I think the next 1,000 points is going to be to the upside.
Interesting. Where are you seeing support at in this market?
Well, you know, we have successfully tested support at 12,000 several times over this past week. If we were to break below that 12,000 area, I see support at 11.7 and that 11.5, and that support area comes in at an upward trend line. But the thing is, week by week, that trend line moves higher and higher as the passage of time goes forward, right? So I really don't see support much below where we are right now.
All right. And are you looking for a straight run or some stops along the way?
Well, it's very rare that you see a run-up straight up, although that is what we had seen in the previous couple of weeks.
Right.
So, I mean, if it does go straight up, that's fantastic. But more than likely, there is going to be some pullbacks along the way. However, though, I would say if you are seeing a pullback, I would use these pullbacks as an opportunity to position yourself in the market as opposed to panicking like so many people did just the other week. And at the top of the segment, you know, we just got done talking about, the chart patterns and how it was able to predict a breakout. I believe if you're able to look at a chart and understand what they mean, you're going to be able to figure out the difference between a common pullback and really a reversal.
All right. So share with us a little bit of weekend wisdom on the two top technicals to look for if you wanted to do that right now.
I'm going to give you a bonus. There's going to be 3 of them.
Well, we've got maybe time for 3, but let's go with the 2 top ones first.
The first thing you want to do is you want to take a look at stocks and you want to take a look at their moving averages. If the stocks are trading above their moving averages, that is good. If they're trading below their moving averages, that's not good.
Okay.
The next thing you want to do is you want to look at the trend lines. Same thing. If the stocks are trading above their trend line, fantastic. If they're below it, not so good. If you see the market pull back and you see good buying come in once it's at that trend line, that shows that you've got a lot of good buying, and you should treat that as just a pullback. If you see the stock break that trend line on increased volume, now you know that maybe something bad is happening because people are bailing out of their positions.
So you're paying attention to medium and long-term trend lines.
Pay attention to medium and long-term trend lines, and if there is time, I would say take a look at the chart patterns, because the chart patterns will show you whether or not, as we said earlier, you're looking at a reversal or whether you're looking at a continuation. Some of the best continuation patterns are right-sided triangles, flat base rectangles, bullish flags, and if you spot those, especially above trend lines and moving averages, you can feel pretty confident that you should be looking at a continuation of an up move.
So overall, you're looking for bullish chart patterns.
Yeah, but again,
but they don't hold a flag up and say, I'm a bullish chart pattern. You have to know how to recognize them, right?
But what's so interesting is that when you do look at a bull flag, for example, you see like a pole-like move, and then you see a flagging pattern. It's very easy to see, and just a little bit of studying on a chart can really help your trading in a big way.
All right, thanks. There's more still ahead. Stay with us here on Profit from the Pros. Here is your Bull and Bear Stock of the Week. A farm equipment retailer and a wireless company make up this week's Bull and Bear of the Week. Research Director Shiraz Mian here with us once again to fill in the blanks on why they are the Bull and Bear of the Week. Let's start with the Bull, as we always do. Tractor Supply Company is the name of this stock, TSCO, ticker symbol. Why are they a Bull?
The Tractor Supply has a very attractive niche, and it's not only the outlook for that niche that's doing very good, but on their own. At the company level, the company is doing a number of things that has improved their outlook too. First, on the macro front, for the outlook for the niche, as I mentioned, the farm commodities and the prices for the overall income outlook for the farming sector has significantly improved. As everybody is aware, that the commodity prices are on the up, and it lubricates the target market for a number of retailers that are exposed to that segment. Tractor Supply has all along remained focused on this segment. They have about 1,000 stores that cater to the recreational farmers and ranchers all across the country. And they're kind of a big box retailer that's centered on rural America. And the outlook for that market is looking very good. On top of that, they have been doing a number of things at the company level, primarily increasing their private label product in their merchandising mix. They plan to increase that to about 25%. They're also implementing a number of initiatives on the sourcing front, and that's showing up in their margins. They had impressive numbers for Q4, which was a buildup on the prior quarter. We are seeing the estimates for the standout retailer going up, and that's the primary reason for us having them as the bull.
All right. On the flip side, Novatel Wireless, NVTL, the ticker on the NASDAQ, is the bear this week. What's going on here?
They are very well positioned in the wireless equipment space, but the near-term outlook is a little bit hazy and unclear. They have relationships with a number of major carriers. 3 of their major clients bring in 70% of their revenue. MiFi, which is a localized kind of Wi-Fi hotspot that they sell to Verizon, is a key product, and the competitive landscape for that product is heating up. A number of Asian manufacturers, particularly one centered on China, are gearing up to undercut entrenched players like Novatel on pricing, and they seem to be losing share in in that segment. And the long-term outlook is for LTE products and 4G. They are well positioned in that, but the rollout and implementation of that may be much more delayed, as we have seen in the other generational rollouts in the 3G and the 2.5G. So the expectation is that later in the first quarter, second quarter in the year, it should improve, but the outlook is not as clear, and that's basically weighing on them.
All right, we'll leave it right there. Stock screening is next. Screen of the Week, an overview of a timely strategy aimed at helping you become a more effective stock screener. Going to be screening for great stocks with great peers this time around with Kevin Matris, our top stock screener here, who joins me once again. We've talked about this before. It's been a while.
Right.
The concept makes sense
Right.
In that you are looking for successful traits in stocks, I guess, right?
Yeah, it's kind of like an amalgamation of some of the other stuff we've done before. But think about it. First off, we have mentioned it in the past that often 50% of a stock's price movement can be directly attributed to the group that it's in, right?
Okay.
That being said, most great stocks from great groups will often have great peers. So if you find yourself in a killer trade or wished you were in one, what you want to do is you want to look at the characteristics of that stock and then try to hunt within that group to be able to find stocks that have similar characteristics.
I spend most of my time wishing, but at any rate, what in particular are you looking for here?
Well, I mean, there's a lot of great things you can look at, but I would say start with the basics first.
Okay.
So, if you see a stock with an outstanding sales growth, right, you can be pretty sure that there are a lot of other great companies within that group that also has some spectacular sales growth numbers. What about, let's say you see a company that has fantastic margins, right? Normally, if you see margin expansion, usually that means that maybe something good is happening to that group. So you can probably find other stocks with very similar characteristics within that group that it's in. So what you're doing is this kind of stock picking idea, it's just called modeling. Trying to find companies that have successful characteristics and then finding stocks that also share those characteristics. So if you find yourself in a certain stock that's doing nothing or worse, going against you, get out of that stock. Find something that is actually performing, and you can find other great stocks that share those similar characteristics.
Is there anything that you would not ordinarily look at?
Well, it's kind of interesting because I would say you would want to look at things that you ordinarily wouldn't look at, in addition to your normal stock picking stuff. Because think about it. Let's say that one of the winningest stocks in a group had a PE ratio that you ordinarily wouldn't consider. Well, consider this. What if you had considered it?
Yeah.
Had you considered it, you could now be in that stock and you could be enjoying the gains as well. So I would say, once again, see characteristics that some of the best stocks have and then try to find stocks that have those kinds of traits. It's very easy. You could look for companies that have the best percentage price change, find companies that have the best EPS revisions, find companies that have just gotten upgraded. That is a good place to start.
All right, and thanks for giving us a couple of examples of some of these characteristics. Good time to run this stock is just about any time, from what I can tell.
Yeah, I think.
I mean, the screen.
Yeah, I mean, it's a good time to look at it. It doesn't have to be, your only way to pick stocks, but I think doing this on a very regular basis is a very, very cool thing.
All right, give me some examples of what came through.
Yeah, for example, if I were to look at the top performing stocks in the oil, machinery, services, drilling industry, right now it's very hot. Everybody knows that.
Yep.
Hero, which is Hercules Offshore, that is the top performing stock based on the 12-week percentage price change. So here's 5 peers that look very similar. Caldive International, Ion Geophysical, Key Energy Services, Matrix Services, and Pioneer Drilling. Very similar stocks, and this is a great way to find them.
All right, we got to leave it there. More still ahead at the roundtable. Stick with us. Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Jobs, oil, and what it all means to the market. Our pros offer their analysis, along with top stock picks of the week. Shiraz Mian, research director, market technician Kevin Matris, who you met at the top of the program, and equity strategist Tracy Reinick, back with us here at this edition of the Roundtable. So, start with you, Shiraz. The jobs news came out. Everybody's waiting for that government report, pretty much in line with expectations. But the initial market reaction wasn't all that impressive. So is the market not impressed? Will they get impressed later? What's going on?
I think the market may be unhappy for other reasons. I think the market is very happy with what the government report about the February jobs number did. Remember, the rally we saw yesterday was in anticipation of the number we got today, and it made me very happy because in the last 3 of the 4 months, it had failed to do what it did today.
Okay, yesterday is Thursday. This week we tape on Friday. People watch on Saturday. So that puts it all in perspective
confusing
for you. Yeah.
So we would have these expectations build up ahead of the non-farm payrolls number because of jobless claims, ISM, and everything else.
Right.
And then in each of the last 2-3 months, we would have a disappointing number, and then we would be scratching our heads trying to make sense of it. We don't have to do that. For the February number, the number is really good. The private sector numbers are really good. Prior numbers have been revised upwards.
So as far as traders go, then they're viewing oil as the bigger headwind here.
It is, and the gain that we had yesterday was in anticipation of today. So I wouldn't necessarily read too much into some downtick in the market today.
Right.
Okay, and Kevin obviously not reading anything into it because you're calling for 13.1. We already covered that ground.
Right.
So you see everything positive for the market here.
Yeah, I mean, I still think it is going to hit 13.1. Once we can clear the 12.4 that we had hit 2 weeks ago, I'll feel a lot better. But getting to
the jobs report, you're viewing that as a positive overall?
Yeah, I think the jobs report is fantastic. So prior to the jobless claims coming out, the consensus was for 180,000 new jobs.
Right.
After the jobless claims, they ratcheted it up to 200,000.
Yeah.
So granted, we came in at 192. But it was above the previous, just below the revised. But the best thing about this whole thing is that the private payrolls came in at 222,000, which is fantastic, and unemployment ratcheted down to 8.9. So I think we're still gunning for that 8%, which I believe is going to happen this year.
Okay, Tracy, you seem like maybe you're not all that impressed with this report.
No, I totally disagree with what Kevin said.
Okay.
The headline numbers look good, but we still have participation rates at 27-year lows. That means people aren't looking. Mm-hmm. They're not even coming back in. And I think it's a bad sign that the unemployment rate actually went down to the 8.9, because if the job market was really improving as much as these numbers seem to suggest,
yep,
you would be going back out to look again, and then the unemployment rate actually goes up. But we're not seeing that. So what is happening to all these people who are not even participating?
It's an interesting thought. So for you, at least, this report is not really underscoring that the recovery is real just yet.
No, we'd have to see it for a couple more months, and we'd have to see some changes in this other underlying data with it. But am I glad that it did what it did today? Sure, it's much better than what we've seen the last couple months.
Yeah, it would be better than the alternative.
Yeah.
All right, let's talk about oil, Shiraz. A lot of volatility out there in that oil market. What's going to have to happen with regard to those Middle East tensions, North African tensions, for all of that volatility to just kind of settle back?
Those Middle East tensions need to go away.
Really, completely.
There are two forces that are driving at any given time the oil prices. One is the real supply and demand forces, and second, the fears and perceptions of the forces that are acting and weighing on supply and demand. Mm-hmm. The real supply and demand situation right now is fine. There's nothing wrong with it. It is the perception of instability and uncertainty about what's going to happen to supplies that's driving it. And as long as you have this turmoil and unrest in this key region, the volatility will remain the same. My personal view is that the worst that could have happened to the oil market is happening right now in Libya. No other major oil producer is as much under threat as they were.
Okay.
So as the Libyan situation subsides, I think we will see the oil price coming down as well.
All right. Hey, did you know, by the way, that March 9th is the 2-year anniversary of the bull market?
How about that?
Do you have any thoughts? Do you have any thoughts on what sectors are going to lead year number 3?
First off, let me answer it this way. I do have to touch on oil because this is going to be the week of disagreement.
Okay, all right, that's all right.
First off, the oil market was going up, trending higher even before the Egypt thing, even before the Libya thing. So the supply-demand situation looks fine, but the supply-demand situation is growing.
Okay.
The demand is growing, supplies are not keeping pace.
Okay.
Even when the tensions, in my opinion, ease, I believe that we're still going to see the oil market get to 110, 120. Keep a look at oil and all of the ancillary services. That's going to be a good thing to be able to drive the stock market.
All right, maybe we'll come back to that other question. Give me your top stock pick.
Oh, mine is going to be Lowe's. That is in the home improvement and products area, right? Do-it-yourselfers, commercial business, this kind of thing. They've got a projected growth rate of 15% for each of the next 2 years. They've got very, very tiny valuations. I believe that based on their chart pattern, there's about a 15% move. I'm looking for $30 in Lowe's.
Tracy?
I'm sticking with the retail sector as well with PetSmart, which is the pet retailer. They also run like pet hotels, which I didn't realize. It's an interesting area. And everybody's still buying stuff for their dogs and cats. And so they just reported earnings. It was real good. They saw 8% growth in sales for the fourth quarter and a little over 6% for all of last year. They're not super expensive here at about 18 times, and they pay a dividend of a 1.2%.
All right, Shiraz.
Surprisingly, I'm on the retail side as well, but I have a retail financial services company.
Okay.
It's called Raymond James Financial.
All right.
I think retail investor is set to come back into the market, and Raymond James and other asset managers and brokers remain well positioned to capitalize on that. I think it's an excellent stock for year 3 of the bull market.
Okay, well, that's an interesting take. What about any sectors? Anybody want to throw out any sectors they think might lead in year 3 here?
Cyclical leverage is key. You need to have stocks and companies that stand to benefit from an improving U.S. and global economy, and I think that should be the underlying selection criterion.
All right, I could always count on you to bail me out. Thanks for joining us this week, and we hope the week ahead is a profitable one for you. We'll see you next time.